Why are United States banks flying gold from London to New York? Banks are in essence shorting the price of gold. About 8,000 gold bars have been moved out of the Bank of England's vaults in recent months. Deep under London's Threadneedle Street lies an intricate network of tunnels holding the world's second largest depository of gold. The Bank of England's 9 heavily fortified vaults hold hundreds of tons of the precious metal valued at more than 200 billion pounds, or Suetedin Cho Yanin Fitafi T $1,000,000,000. But now they are slowly being emptied over fears that President Donald Trump is about to start a global trade war. Much of the gold has been shipped to New York City, where the commodity is, for the moment, worth substantially more than in the United Kingdom. The United States Bank, JPMorgan, and the United Kingdom's HSBC are two of the biggest names flying the precious metal across the Atlantic to cover losses on short positions. The disruption to the gold market and subsequent movement of bullion from London to Manhattan appears to be a consequence of Trump's looming tariff threats against imports from the European Union entering the United States. This week, the president has already announced sweeping 25% import taxes on two other metals, steel and aluminum. Traders are now nervous that Trump will impose tariffs on gold. Deputy Governor of the BOE, Sir Dave Ramsden, told The Telegraph it had been inundated with requests after New York's futures market prices surged above the London cash price. Gold futures in the Big Apple have risen 11% this year, closing Thursday at $2,935 a troy ounce. Some analysts predict they could soon hit a record high of $3,000 a troy ounce. Roughly 8,000 bars are believed to have been moved out of the bank's vaults over the past few months, equating to about 2% of its total stock. Some of the world's biggest financial institutions are now capitalizing on the emerging arbitrage opportunity. Banks are in essence shorting the price of gold. JPMorgan and HSBC, who have access to huge gold supplies in London, often lend out bullion to borrowers who need to use it as collateral. Interest is charged on the loan, with the banks hedging against price decreases by selling gold futures in New York. In February alone, JPMorgan Chase is estimated to deliver more than $4 billion in gold against futures contracts in New York, according to COMEX filings.